August Biniaz with Real Estate Investing Demystified. We're here in Orlando at the great conference, Jake and Gino's conference, and we're with our good friend Chris Salerno.
Yeah.
Chris, how are you doing, man?
Amazing.
What brings you to the conference?
Reconnecting with individuals like yourself, existing and new business partners.
Great. Yeah, we've had you on our podcast in the past, and historically you've been a multifamily investor. But then on part of your emails, part of the content you're creating, I hear about car washes.
That's right.
Can you talk to us about that? What is car washes? Can car washes even be syndicated? How does it work? Can investors receive cash flow appreciation? Give us a crash course on car washes.
No, very much so. Right now we're in a very unique time where cash flow is very important. We have over 10,000 people in our database that are investors, and what we hear on our quarterly updates or surveys that we give to them is that they want cash flow. And the issue that we're running into is, given the current debt environment with multifamily, it's hard to find cash flowing assets. And so we then decided to go ahead and do a lot of research and then pivot into the car wash industry because of the cash flow they pour out. So investors for our type of car wash get preferred equity spots where they're receiving a 10 to 12% annual return. And then on the back end, they're receiving a 5 to 8%. The great thing about car washes too, it has a very unique tax code where it's actually depreciated at a 15-year depreciation schedule compared to multifamily where it's 27 and a half years.
Wow. And then, just like investing in real estate or multifamily where you can, there'll be multiple different business plans where you can do a ground up development, where you could do value add, where you could buy distress. With car washes, talk to us about the business plans itself. Is it ground up development? Investors are involved from day one?
Yeah.
Talk to us about that.
So our main focus is ground up development. We will look to acquire. However, we really are building a presence and in a brand. And so we can do that with the ground up. The very unique thing about our type of ground up development is we can do it within about 4 to 4.5 months. Where our competitors are taking 12 to 18 months to develop, we can do it in a shorter time frame. We're not looking to rezone properties, but our building structure is actually constructed in about a week and a half.
And that increases investor IRRs.
Oh, very much so. Yeah, because we are also developing at a lower cost than the other competitions where they're developing at a lot higher cost. They're anywhere in the ballpark of 7 to 10 million, where we're in the ballpark about 3 to 4.5 million. So we're at a substantial lesser amount, and also we can get up in a faster time frame where they take a lot longer.
Got it. And these are syndicated deals? This is a fund? How does that work?
So we have a $10 million fund, which will acquire about 4 to 5 assets. And then from there, we'll open up a second fund, which will acquire anywhere from 10 to 15 assets.
Got it. And then when the business plan is completed, the business is cash flowing, is operating, the plan is to roll up that fund and sell those deals. And what does your buyer profile look like?
Yeah, so the buyer profile is going to be a private equity fund. And they're going to want to see it bulked up in a portfolio. So it's going to be a 5-year hold, so investors are going to be able to be in the project for within 5 years. We may sell a little sooner, all depending on the market environment. And then from that, in that year 5, our main focus is actually look to refinance, pay investors capital out. Then they can move that capital into a new deal. But our second option would be to go ahead and take it to a private equity company as a bulk portfolio. The great thing that we're buying right now is at a higher interest rate environment. So our interest rates are anywhere from 8 to 10%. Interest rates, in my opinion, will start to taper down in that year 3 to 5. Then we'll be able to refinance at a lower interest rate and take out more money, actually.
Got it. Yeah. Now, switching the car. And if any of our viewers want more information, we'll put it in the show notes how they can connect with you. QC Capital.
Yeah, just go directly to our website, qccapitalgroup.com. We have all the information right on there.
Well, switching the conversation briefly to, I know your time is limited, but switching the conversation to multifamily. Your business, you guys built the foundation of your business on multifamily. Talk to us about what you're seeing in the market. Are you guys looking at deals? Are you guys the proverbial pencils down? Are you underwriting deals? What are you seeing in the market currently? Talk to us about that. Your thesis, as I may.
Very much so. So love multifamily still. Everyone needs a place to live. So we're definitely not leaving the multifamily space. We're just slowing down on our acquisitions. The reason being is because the deals that we've been pursuing due to the interest rate hike have not been penciling in. I mean, we are millions of dollars off from where other people are getting awarded deals. For example, we have a deal that it's a large REIT, and they came back to us because they know we can execute. They came back to us to purchase this deal. They had 2 buyers already fall out, and those 2 buyers beat us out in the initial offers. And we came back to them and said, look, you guys want 25? We're at 22 right now. So that's just where the market is at. So we're really watching it very closely. We're making sure that if we do acquire or go after a multifamily deal, it's going to have high cash flow. Given this current market environment,
high cash flow day one, even with these high interest rates.
Has to.
So your going in cap rate has to be above your interest rate.
Yeah, and that's what we're looking at right now due to the current market environment. It is very difficult when you're analyzing a deal and it's 1%, 2% cash flow year one. It's super risky. So we're really looking for high cash flow deals. And because we're not dependent on it, if it's not falling in our lap and it doesn't meet our criteria, we'll walk away. You know, we have the car washes that our investors love because it's high cash flow, high tax benefits.
Got it. And lastly, what is your thesis on interest rates? Do you believe that in the current environment that investors should go on fixed debt, long-term fixed debt, interest only? Is that the best way to go? Should they still look at, knowing interest rates are going to come down, should variable rates even be an option that investors should look at?
Yes, for sure. I think you should still look at all your options. I think you can look at variable. Just make sure you buy a cap. If you don't buy a cap, you're going to be in a world of trouble. Make sure you buy a cap and make sure you underwrite to that cap and make sure that that cap is the duration of that loan term. Now, when it comes to the interest rates lowering, I would tell a lot of multifamily and either commercial real estate investors to look at those loan terms, because some lenders will also put in there that it cannot go below a certain amount. Even if it's a variable, I know that some will, if it starts dropping to 3%, they're not going to have it, because in their loan terms they state that there's a bottom line too. So it's very important to read those. I think you're okay if you buy a rate cap and it's the duration of that loan. And even if you go fixed, I think you're still going to be fine. It's a very unique time. I do think that the Feds are going to raise interest rates in Q4. We've had a lot of job data that came out with more jobs. It's very unique though, because those more jobs are part-time. Actually, they're not full-time. So if they really take that into account, who knows? But I think they're going to raise it again, and then from there, I think they're going to hold off in Q1, Q2 of next year, and I do think it's going to be a lot longer.
Got it. Thanks so much for all your wisdom.
Yeah, very much so.
Good luck on the car wash business.
Yeah, thank you.